I'm going to share with you how to, tell the next price movement without using indicators on your trade. So this basically is going to be the use of technical analysis, just analysis, and, price action strategy, like I always call it. How to, you look at the charts, you look at the price movement, and you can tell when the market is going to buy and when the market is going to sell. All right. So we'll start this on crash 1000 index markets, going straight on into the chart right here. We'll zoom out a little bit. So you want to make sure that you zoom out from this market, all right, so that you can see where the market is. All right. So when you have zoomed out of this market right now, then you look at the past movement of the trade. So what I'm seeing here is that the market is selling. I've been selling. You can see here there's a long spike for a sell, as you can see at that point. All right, it's a very long spike. Anytime you see that the market sold for a very long period of time, I want you to know that the market will tend to buy for a very long period of time as well. So this, crash and bull market always tend to balance, those movements. Okay, it tends to balance those scale, movements. Enter the market sell for a long period of time, the market will tend to buy for a long period of time as well. Now, this is the market I've sold right here. You saw that very long and the market bought. And even though when that market is buying, it does not mean that the market will not spike when it's buying. It's going to still sell. Although the sell will not be as long as it was on the previous trend, but there's still going to be a sell. That's why I see here that there was a sell, but it was not that like this. Here there was a sell, but it's always going to sell when it's buying. I want you to know that. Okay, but when it's selling, it's going to sell. You just break downwards, right? So you see that it's buying right here, it's sold like this, it's sold up to this point. Now the market is at this point right here. This market is going to buy up to this point. This is my prediction right here. The market is going to buy up to this point. Then it may retest, and even though as it's buying right here, it's not going to buy straight upwards, like just straight upwards like here. It's going to buy, it's going to sell a little bit, it's going to buy, it's going to sell a little bit. Okay, it's going to buy, it's going to sell a little bit. So now we're seeing that the market is selling right here, and we do not want to place a sell at this point in time because the market have bought for over 10 candlesticks. Okay, this market have bought over 10 candlesticks, so it's not a good entry point for you to place your buy, but it's a good entry point for you to look for a sell. But I'm not going to use any indicators to tell you that. We'll go over to the 1 hour time frame to confirm this for you. All right, now we're seeing that the 1 hour time frame is showing us that the market is selling right now. The next step is for you to buy, but the market have not broken out. It has not broken out, right? So I see that there's a possibility that this market would sell again. If the market have broken out, and you see that if this candle have broken out like here and start with an upward trend, then you can tell that the market is a buy, right? It's going to now start to be buying, but the market is still selling in this line and has not gone out, has not broken out. So there's a chance that the market can retest and go back downwards. So you wait until you see the market started buying before you place a buy. And at this point in time, you want to wait for the spike that will come into the market before you place a buy. So you are looking for a sell at this point in time. So the market is going to sell. All right. And when you're also trading in this market, you want to follow your mind. Anything that your mind tells you, that's what you want to always tend to follow all the time, because your mind is correct. You that is trading this market, you might not know everything that you are doing, but there may be some time whereby your mind will tell you that exit, just exit at that point. If your mind is telling you to exit the market, if your mind is telling you, just follow your mind and exit the market so that you don't end up in a losing trade. Okay, you don't end up in a losing trade. And another thing you need to watch out for is how volatile the market is, and whenever there's a spacing in the market. Okay, whenever there's a spacing in this market, right now, take a look. There's a space here for this market to drop. The market have bought over 10. There's still a space here for this market to drop in price movement, as you can see. Right, there's a space from here. Now the market could drop in price movement, and we are seeing that the market have been selling and selling. The market can also sell before it will now start buying. That's why you saw that on the 1 hour time frame right here, the market have not broken out of this candle. It should break out and start creating an upward trend. You start seeing the blue line going upwards, then you follow for a buy. But right now the market have been buying, right? It have been buying, and the market should sell. So if you enter into this market like this for a buy, there's a chance that the market will sell on you, because this market is so tricky that it can't sell whenever you think that, oh, this market is going to buy. It will sell. All right, so you can see that I'm able to tell you guys the next price movement without even using the indicators on this trade right here. I'm able to see where this market is going just by looking at the previous trend and seeing how the market have bought and how the market have buy for a certain amount of time. All right, you can see at this point. All right, take a look. So I'm waiting for the market to sell. This market is going to sell from before the 1 hour time frame will break out. This market is going to sell. Okay, it's going to sell. And for example, if you are into the market right now and if the market is at the overbought, which is towards this point in time, and the market have buy, you want to make sure that you look for a sell at any point in time. You are into this market and market have bought up to this point, always look for a sell entry. Imagine that you are into this market right now and you place a sell and you got all this profit. That's massive. Very big, massive profit right there. Very massive profit. Take a look. Even at this point here, take a look from here. Now the market is supposed to sell. Take a look. Massive profit. Massive. Here is sold. So whenever there's normally the basics is, when there's an overbought, when the market's at the overbought, you place a sell and so that you can cash out the spike. If you even have a bigger account, you can just hold the market so that when you place a sell at the overbought, you just hold the market until you get to the oversold and you have made all your profit from that point in time. But this is for people that have big accounts, like $1,000 account, $2,000 account, $3,000 account. But for small traders who have $100, $500 account, $150 account, you cannot hold the market now. You cannot hold the market for a very long period of time, because the market might just take away all those capital and profit from you. All right, so I hope you understand what I've said to you guys, and I hope you found value in this video and you are able to learn 1 or 2 things from this video that I've shared with you guys. So I'll see you guys on the next video.